Now, I'm curious just because I want to get to the private credit here and more of the private equity, but when you're looking at secondaries, I see this in pre-IPO companies mainly is what I'm talking about secondaries. What I found very interesting is, like you just mentioned, 2023 during the summer, everybody was really just sitting on their hands. They just went on vacation and just chilled and did nothing, but the valuations drastically decreased. Now, into 2023 here, going into 2024, I'm seeing those specific markets really heating up, and I'm talking about the open AIs, the SpaceX, the Stripes, the Databricks, those things where, because the valuation decreased, almost an 80% margin, almost, 80% haircut, I should say. A lot of people are deploying, very actively in that. Do you see any arbitrage or any opportunity in that? I've heard two different things. One, it could go up to the right trajectory within the next few years, or this is the actual baseline valuation. 2022, those were actually maxed out valuations where it wasn't actually accurate on what the company was structured at. So how do you look at it?
Yeah.
I'm curious.
Well, valuations have turned around because look at the public market comps. Everybody's talking about this magnificent seven or magnificent 10. I mean, it's really tech, right? I mean, tech got, pretty well from 2022, but you look at the returns this year from that, those big names like the Teslas and the Googles and the, Nvidia, everybody's in Microsoft, everybody's trading around this AI trade. Listen, I'm the first to admit AI is going to change the way we do business. I'm implementing a lot of AI here in my business, in my company. But I think it's probably gotten a bit ahead of itself in the public markets. With these nosebleed valuations where these stocks are trading, on average. When you look at the S&P, the market's like kind of flat to down when you take out all those tech stocks. And because it becomes a self-fulfilling prophecy because the S&P is market cap weighted. And so the richer they get, the more the index goes up and the larger weight they are in the index. And it's just a self-fulfilling prophecy. So you've seen those public market valuations trickle down into the private market stuff. And there are some mid to later stage businesses coming out that are really, big on the AI stuff. Every young new manager I see tells me they're focused on AI. Analogous to, when I was starting my career in the late 90s and early 2000s, where you had the dot com, everybody was getting, points for talking about .com this, .com that, because it's going to change the world. And look, the NASDAQ did hit 5,000, but not for many, many more years after it crashed. So I'm not suggesting that we see a crash, but in, pure market theory, you do tend to have reversion to the mean. So it's probably, if the economy is able to escape a recession and rates come down, there's probably, these kind of more consumer staples, more stable type stocks that are due their day, which again have not performed. But tech and crypto and all that stuff has been off to the races this year.